Hey guys, welcome back. In this video, we're going to take a quick look at the history to try to actually explain our short idea for a very controversial stock. What can we learn from the history of Netflix that could give us an idea of where CMG stock is headed next? On this slide, I've got four dots. And before I move to the next one, I've got a question for you. What could these dots mean? Dot number 1, 60. Dot number 2, 80. Dot number 3, 705. And dot number 4, 650. Please take a look at these dots. And if you're a brand new trader, you may not have the slightest idea what these things are. But if you've been trading for at least the last 5-6 years, you may actually know this sort of a trivia question here. 60, 80, 705, 650. And I sort of gave you the hint in the headline right here. History of Netflix. I'll give you another moment and we'll move to the next slide. Here's what we've got right here. Okay, at $60 a share, Carl Icahn acquires 9 to 10% stake in Netflix. That's years ago. Not initially when Netflix was going to the 300, but when Netflix was at 300, that's when it was still mailing DVDs and stuff. And so the growth was slow and it fell all the way to 60. Nobody wanted to touch the stock with a stick. Well, Carl Icahn came in and said, look, I bought up a bunch of shares at 60 bucks. Momentarily, as soon as the market finds out the news, the stock it rockets to 80 bucks a share. And since then, as you know, it's got a nice trip all the way to 705. Okay, now multiple times it's been trading between 3 and 400, 3 and 400, and then so on, and then it goes to 705. And then it actually drops all the way to 650 within 48 hours. And the reason I so clearly remember that day, and by the way, this was the pricing way before, Netflix did a stock split 7-for-1. So just jumping ahead a little bit, Netflix does a stock split. After that, it bounces to 740, does a 7-to-1 stock split. It trades at about $90 to $100 a share. And so now from that stock split, it's back, as you know, between $300 and $400 a share right now. 370 to be exact is the last closing price for Netflix today. So the bottom line is from 80, it's got a nice uptrend all the way to 705. Once it hits 705, the news breaks out that Carl Icahn decides to sell pretty much his entire stake. And so I actually had the call options this morning. That morning the stock opened up on Netflix about 690. It was kind of nicely, kind of like Amazon today was going for that 2,000 level. It was one of those moments where the stock was reached all-time highs, then the news breaks out, and so I immediately sold all my calls and opened the 665 puts. I bought them for 50 cents, and then within 48 hours, I was selling them for 15 bucks. That was a nice little trade. And so the point here, the parallel I'm trying to draw is this. Okay, when the first investor sees a turnaround in the company, it comes in and says, hey, I'm going to buy up a substantial amount of shares. And for those of you who don't know Carl Icahn, he's a top-notch activist investor who's participated in hundreds of deals that made an enormous amount of money. Probably Netflix was one of his more known and most successful ones. But he's done plenty and plenty of other deals. He's kind of like the Warren Buffett of the activist investor world. So when the market finds out about the news, the reaction is almost instant, right? So, and that was a great short-term trade. And I think with the CMG, after I explain what's taking place right now, you may see the parallel I'm trying to draw here. So what is going on here? What is going on with CMG? If we're to look at a history of Chipotle Mexican Grill, similar situation. And I'm not going to go for the entire history, right? Because Chipotle at one point, just like Netflix, was trading at 60 bucks, all-time highs. Chipotle was trading at 850. Then it drops. And so when it drops from 850 all the way to 390, Bill Ackman, who runs the Pershing Square, comes in and acquires a substantial stake in CMG. Well, overnight the stock goes similar to what Netflix did, right? When everybody found out that Carl Icahn took a stake. So CMG rallies from 390 to 445. Now, Bill Ackman doesn't have it as easy as Carl Icahn. After he acquires a substantial stake, even on the good news, the stock stops rallying after that. maybe going here from 445, maybe 450 briefly, and then it starts dropping. Drops all the way to 300 after a certain amount of time, even drops to 250. As you know, from there on, CMG had a really nice run. So it runs to 500, 525. We actually took multiple short positions in here when it dropped from 469 to 430, actually 425. And so we recently sent out an alert. I'll show you a copy of it right here when the stock was trading between 525 and 500. Well, today after the market closed, the shares closed about 485, at 483 share range as of today, which is August the 30th. And after the market, you see the stock is trending just a little bit lower under the 483 range, and that's because the news came out that Bill Ackman of Pershing Square actually had roughly about 3 million shares. And unlike in the case with Netflix, where Carl Icahn sells the entire stake at that day, Bill Ackman actually turns out just liquidated 1/3. So he's got from 3 million shares, he's down to 2 million. And so it's okay if he would have maybe gone from 3 million to 2.9 or 2.8. Okay, so he's trying to lighten up, but now that's 1/3 of a position. That's a substantial position. If we're to calculate, of course, he kept buying it on the dip. So majority of the stake he collected right here around 380, 390. Then he kept buying it as the stock was going lower. So, at these levels right here, 500, 525, he was probably profiting a nice between, I would say, 35 and 45% return. So he was liquidating the shares right around here. Now, let's take a closer look and see what could actually happen next. So if we're to draw a parallel again between the Netflix shares, on similar news, Netflix shares were actually breaking down lower, roughly 8 to 10%. If we're to go conservative in this example with CMG, because again, not the entire stake is being liquidated, but only 1/3, but it is a substantial amount. I think if we're to just use a conservative number of 5%, okay, and instead of 48 hours in the case of Netflix, we're to use just 72 hours, okay, we can easily see a $20 to $30 drop in CMG from the 483 level. So our target price short term would be a drop from 485, 483, where a share is close today, to a 455. So roughly we're looking for a $30 drop. Besides the fact that we're kind of using a historic example of a similar situation, what happened to Netflix, what else are we potentially seeing? I'm about to let you in on some specifics. But before we do that, here's what actually took place earlier this week on Monday when CMG shares were not trading at this level. As you can see, 485, where they roughly closed today. After the market, you can see they're trading at 478.65. Now, this move of about $5 so far happened on the news that Bill Ackman liquidated that 1/3, that 1 million shares roughly of his position. So this Monday, before all this takes place, this is the alert that we send out. If you're not subscribed to our alert system, please make sure first you take the chart course so you can understand the alerts better and manage them better. And number 2 is subscribe to the alerts so you don't miss out on great situations like that. Now, here's what happened on Monday. When it was traded, CMG was trading about 5.13 a share. This is when the alert went out. And yes, he would have had plenty of time to take advantage of it because the alert was sent out way before the market opened at 8:36 a.m. Now, since Monday, I know because I have heard from some of our subscribers that they were happy to make, 100% return, 200% return. And so when the stock fell that day from, 513 to 495 level, a lot of the guys that are subscribers, they were locking in gains. Well, as you know, I'm a strong opponent to holding on to your positions and let the profits build. And one of the best tips I can do, if you're ever in doubt what to do, sell half of your position and let the other half run so you can accumulate more profits. Because if you would have just done that, look, the stock now, and it looks like it would track to open tomorrow, let's say at 478, you would have been, if you were buying the 500 puts right here, at the time you could have easily bought them at about $3, $3.50. Tomorrow these could be worth as much as $30, $40. That would be 1,000% return. All you had to do was just act on the alert and hold on to your position. Clearly, there were instances, as you can see here in the chart, that you would have very much been tempted to get out of your position. You see that at one point it falls to like pretty much a 490, then it jumps to almost back to 500. But overall, the trend is downward, right? And clearly, again, yesterday it jumps a little bit higher, ends up much lower for the day. Even this morning, see, it tried to go again over 490, jump lower. But overall, all you had to do is just stick to your position. We're not talking about sticking to your position for a year or two here, guys. We're talking about you just being able to stick to it for 4 days for 1,000% return. Yes, it is that simple. Just don't do nothing. Take action on our alerts, stick to the position, and collect the profits. Okay, now I will say this, we don't get all of our alerts precisely, but we do have a good number of alerts where you have returns of 3 to 4, 500, sometimes over 1,000%. But in order to make the most of our alert system, you really do need to understand how the charts work so you can identify the exit levels and being able to better manage your trade so you wouldn't be jumping in and out in situations like this. So definitely take action. Click some of the links below. Sign up for the alert service. Before you're allowed to sign up for the alerts, you absolutely have to take the charts and patterns recognition course. That will definitely make managing the alerts much simpler. So here's the alert. Actually, as you can see, it did go out at 8:36 a.m. We were recommended 510 puts. Now, I know a lot of guys that trade with smaller accounts. Some of these $500,000 stocks, the options on them could be quite costly. So when the alert comes out, again, you didn't have to buy necessarily the 510 puts. You could have bought the 500 puts, which at the time were sold for only $3, $3.50. So you could have easily filled your order at the 500 strike, and now you would have been $22 in the money. So currently as it stands, you would have had a 700% return in 4 days. Now we'll see, because if tomorrow drops 20%, that 700 return would actually turn into overall return way over 1,000%. Now let's take a look at the specifics and why did we get into this position in the first place? Because clearly there were no news at the time, or there was no way for us to know specifically that it was Bill Ackman that was liquidating his position at these higher levels between $500 and $525 a share. So it's all in the charts, guys. The charts don't lie. Our decision was based on shorting the stock, making the observation that the stock is making a double top. Now, this is a very interesting and a very favorable position, because if you consider what we call a situation of loss of momentum, in other words, where stock has gone up substantially from the 320 all the way to the 520 level in a very short amount of time, and slightly earlier before that, it's not, you can't see it on this chart, but it was just couple of months before that, it was 250. So the stock literally goes from 250 all the way to 525. This, after such a substantial run, by definition, some investors are going to come in and take profits, and that's exactly what was happening here. Now, an early warning sign was this right here. Do you see this huge volume that I've got pointed out by this big purple dot right here? Well, this was a warning sign that something like this was going to develop in the near future. And again, we see another follow-through on huge volume. Do you see how these red bars are exceeding the gray bars on this chart? So pretty much there's a lot of sell volume. There's a lot of red bars that are exceeding the buy volume. And even though this stock, it looks like the price just keeps going higher, okay, the strength of the stock, here's a case of divergence right here, is actually diminishing as the stock tries to hit the level of 525 second time. And so shortly after that, Monday, it starts dropping, and we see multiple consecutive days lower, which makes your option appreciate in value rather rapidly. Okay, so here's what we've got here, okay? Also, on accumulation distribution, we're seeing confirmation of fact that the strength in the stock is definitely diminishing, and they're definitely distributing the stock. We're also seeing a bearish confirmation on the MACD. The black line crosses the orange line, signifying a death cross formation right here on the MACD, showing us that the stock has further downward potential. Well, as you probably know, I like to look at multiple time frame charts. Let's see if we're seeing the same thing on the weekly chart. And yes, we do. Look how clear we see as the stock goes higher. Look what happens to the volume, right? Less and less people are actually buying the stock at these levels. They're not interested in buying the stock. And if less buyers come in at these levels, the stock literally has zero chance to move higher from here. There's also, we're observing a couple of bearish candle formations here. The relative strength of the stock is definitely diminishing as it's hitting this high level right here. Also, if we look way back in the history, this is sort of a double top. This is top one, top two. Okay, we're clearly seeing that after this huge volume right here, when everybody was getting into the stock, I think it coincided with a nice earnings report from 320 to the 420 range roughly, right? After that, we're not seeing any huge volume follow through, but we're seeing a huge distribution right here on the, represented by this big red bar. So this is what we've got. Look how close the stock is as far as the weekly. It is still in a very much bearish pattern, because remember earlier in the video I mentioned how the stock used to trade at 850 bucks. So at this level it's half of what it used to, and for very good reasons. Years ago the stock literally fell from 850 to a level of $400 within literally just a couple of months because of all the poisoning stories that just broke out in the news. I remember actually buying some put options on CMG the day the news broke out. It was already trading at like 620, and I was buying 600 puts that day. And literally within the last 15 minutes, the stock went from around a 600, lower 600s, all the way to 520. It dropped 80 bucks within like 15 minutes on a Friday. That was probably one of the best trades I've ever had, because those dollar put options were worth 80 bucks within 15 minutes. It was absolutely amazing. So just got a little sidetracked by some memories here, but here's a further observation. Right here on the MACD, this black line is about to cross this orange line, and we're going to have a situation where the stock could fall much further. Now, this chart right here actually was taken before the news broke out that Bill Ackman sold 1/3 of his position. So when the stock opens tomorrow lower, right, it's actually going to open below this orange line, which is actually going to be a very bearish sign, right? And so from there, clearly, as we look at these weekly chart, the stock definitely has room to drop all the way to 440, possibly even 420. This is why I got this big dot right here. So 420 to 440 could be like a longer term price target here. Okay, so key takeaways. CMG could easily drop 30 bucks in the next 72 hours. In terms of short-term options that could produce returns to the extent of 200 to 300%, possibly more. 1 week price target, 455 bucks. Now keep in mind the markets are going to be closed Monday, so we're talking about a day trading day tomorrow plus 4 more days next week. So in 5 days, we're saying it could go to as low as 455. In the next 60 days, we have a target on this thing at 420. Now guys, clearly there are options that you can trade tomorrow on this thing. And if you're an experienced trader, I hope you do take advantage of this, because the risk reward factor is definitely going to be in your favor. If you are new to trading options and you're wondering how can you get this 200, 300, 500, 1,000% returns, definitely click the links below. Schedule your 20-minute free trading options coaching consultation. You will be able to ask any questions about trading options, charts, whatever you've got on your mind about trading. You'll be able to ask a question directly and get the answers you've been looking for. Also, take advantage of some of our chart courses, some of the other courses that we have recorded, so you can become a better trader. Take action now. Life is too short. Make the best of it and make this trading year your best trading year ever. Thanks for watching, and I'll catch you in the next video.